Hello, and welcome to this video on the new $1,700 tax credit for school expenses that was a part of President Trump's big, beautiful bill. This tax credit is scheduled to become available to residents of the state of Michigan on January 1st, 2027. It is a 100% non-refundable $1,700 tax credit that encourages donations to scholarship granting organizations. This tax credit will result in a reduction in one's tax liability. So basically, you can either pay the government $1,700 or you can donate $1,700 to your preferred SGO, scholarship granting organization, and then the federal government will reduce your tax liability by the same amount as you donated. These tax credits are non-refundable, so your tax liability cannot go below zero due to this tax credit. And all taxpayers are eligible to take advantage of this tax credit. What can these scholarships be used for? These scholarships can be used for things like tutoring, fees, and tuition. Also, room and board, uniforms, and transportation, and expenses to purchase any computer equipment or technology. Who can start an SGO to receive those $1,700 donations? Organizations such as churches, private schools, public schools, football programs, 4-H clubs, Rotary clubs, running clubs, and all manner of other organizations are eligible to start their own scholarship granting organization to receive donations that will be refunded up to $1,700 via the tax code. Political map as of July 2025 in the state of Michigan. The first step toward getting these tax credits implemented is the governor of the state has to opt in before any residents can take advantage of the credit. Next, the state will compile a list of approved SGOs who can receive donations that will be refunded via the tax credit. That list will be submitted to the federal government on January 1st of every year. Any SGO that makes the list can receive donations up to $1,700 that will be refunded if the tax credit is used. Tax law can be confusing, so let's try to simplify it a little. Let's start in the top left-hand corner of the screen. As you can see, this flowchart begins with church members donating $1,700 each to their church SGO. The church SGO then gives K-12 scholarships to church kids. The SGO can keep 10% for administration costs. The church SGO gives 90% of the donations it received from church members to scholarships for the church kids. The church kids then use those scholarships to pay charges like tuition and other qualified fees, as we talked about before. The original church members who donated $1,700 each will be reimbursed from their federal taxes by their tax liability being reduced by the same amount that they donated to the church SGO, in this case $1,700. SGO rules. In order to qualify to receive these tax credit donations, there are some rules that scholarship granting organizations must follow. First, each SGO must give at least 10 scholarships and spend 90% of the donations that they receive on scholarships. They can keep 10% for administration. These are only for K-12 scholarships. Siblings of kids who already get scholarships from an SGO get priority over newbies. No earmarks are allowed on donations, so you can't give to the SGO with the earmark that this will go toward a specific kid. There are no commingling of funds other than the $1,700 tax refundable donations. Kids who get scholarships from the SGO must go to at least 2 different schools. The SGO is responsible for verifying the income of the families the kids come from. Families must make less than 300% of the average in order to qualify. And no self-dealing. So directors' children or grandchildren are not allowed to receive scholarships from the SGO that they direct. So why is this such a big deal? There have been lots of tax credits out there in the past. The answer to that question is churches. $1,700 a year is approximately $37 per family per week. If a church can assemble 500 donors who will be reimbursed with a tax credit to donate the full $1,700 a year, that adds up to $850,000 a year and $0 out of pocket for any of the church members who make the donation. $850,000 a year means that the church can give 100 $7,650 scholarships per year and keep an additional $85,000 for admin costs. That is enormous for most churches. So they will have a very large financial incentive to get on board with this program and try to get their members to take advantage of this tax credit. Tax law can be very confusing and dry as a subject. So let's try to put this into real-world terms that everybody can understand. The bottom line is Uncle Sam is acting like Santa Claus when it comes to handing out money through these tax credits. In order to capture that money that Uncle Sam is handing out, churches need to have a net. That net in this case is a school. If churches have an SGO and or a school, they can capture these 100% reimbursable donations up to $1,700 per person. And as we discussed in the previous example, the results can be financially staggering in how much money a church can get and harvest, for lack of a better word, from these tax credits. So what do we want to take away from this video? What we want to take away from this video is to expect many more church SGOs and schools. The financial incentive to the churches is just too big for them to ignore. This is, in many cases, going to double, if not triple, the revenue of the church. They're not going to let this stand on the sideline. That creates many opportunities, many problems, and we should all take a good hard look at this to see how this might affect what we think about education. Thank you for your time. Have a nice day.